August was quite the up and down month. The S&P finished down 4.5%, but it was up 3.5 at one point. The NASDAQ was down, and it finished the month down 6.3%, but I think it was up like 3.8 at one point. Massive fluctuations in price. In the last 5 days, I believe the NASDAQ is down 8% by itself. So there's a lot of things going on here in the market. There's that we bought him like June 17th or 16th. Everybody thinks that was maybe the bottom. As you guys have seen in this channel, I do not think we're anywhere close to a bottom. Why is that? Well, I look at major valuation metrics and I look at people's behavior, and my job is to evaluate the markets based on that. So if you're new to the channel, I'm Paul. I'm a value investor. My goal is to look at individual companies and buy when I think their price is selling for a discount to their intrinsic value. What does that mean? I determine what the company is worth through good times and bad over long periods of time. And if I see a disconnect between perception and reality, I use it as an opportunity to buy undervalued assets. Does that mean they go up immediately? It does not. It does not necessarily mean they're going up. What it does mean is I can dollar cost average as they go down as long as my thesis stays the same. So, by the way, if you ever want to see cute pictures of my dogs and like that, follow me on Instagram or just watch my Instagram page. It's pretty cute and exciting. So when it comes to perceptions, I went to the bank back in July. And I went to the bank teller, and again, it's no knock on any job or whatever. But clearly the bank teller at my bank, heck, even the main banker at my bank probably doesn't even understand investing. But the bank teller was like, hey, what do you do? And I said, I do stuff. I'm an investor. He's like, oh, I just bought Amazon, Coinbase, NVIDIA, and loaded up on all these stocks. And I was like, oh, okay. And I thought to myself, this is how I know we're not at the end. When I see people still believing in things like cryptocurrency, yes, cryptocurrency, I do not believe it has any intrinsic value. When I see people still believing in hype stocks that are down big time, we still haven't gotten there yet. We need to get to the point where people are giving up on the main staples of their investment portfolio. The Apples, the Microsofts, the Googles, the Teslas, those kind of things. So in August, and actually since this year started, we've seen a lot of ups and downs. And I think this is the typical market the way it goes. We have a booming bull market. This is what I think happened this year. Boom. And we're somewhere in this range right here. Okay. I hope that we're on the flip side of this thing going down again. Now you might sit there and say, oh my God, it's this sociopath wants stocks to go down. Absolutely. Why would I not? I want to be able to invest my money at lower prices. I want to buy cash flow at lower prices. You should too. If this makes sense to you, keep watching this video. Subscribe to our channel. So there are 3 main valuation metrics that I look at. And if you've seen our videos before, these are the long-term valuation metrics that over long periods of time have shown that they're very reliable in terms of determining where values are at any given time. The first one is the stock market to GDP ratio. Now, this is called the Buffett indicator because Warren Buffett loves it. He says at any given time, this indicator will show you some reasonable accuracy of where valuations stand. It takes the entire stock market GDP and divides it by the stock market cap and divides it by US GDP. It's currently at around 161%. It should be around 80% or so. So it's showing we need to fall in half. Now, do we fall in half, or does this get a little bit better? Does the GDP get a little bit better, and therefore it can drop a lot less? Sure. But it's easier to fall than it is to go up. Look at how fast falls happen. Look how slow the rise happened. Even though the rise in this recent bull market was very, very quick, but it's much easier to fall. Look at COVID. We fell 40% in 1 month. In 4 weeks, the market fell 40%. That's pretty impressive. Metric number 2. This is called the 10-year cyclically adjusted PE ratio. This has been made famous by Robert Shiller. And what it does is it takes the last 10 years of earnings on the S&P, brings it to today's dollars using CPI, and then divides the stock market GDP by that total income level. Historically, it's around, call it 16. It's around 15 or 16. It's currently at 29.73, almost double. Okay, so that's 2 out of 3 that show double or almost double the valuation where we should be. And the final one is the price to sales ratio. Historically, the price to sales ratio has been 1. What this means is the price, the market cap of all stocks divided by the revenue of all the stocks. Okay. Now, this goes back in time way long ago. I do think the metric should be a lot higher than 1. And the reason being is, as this country gets more and more advanced, we become more service oriented, and our gross margin and our overall profit margin will increase. And therefore, maybe the profit per dollar of revenue should go up. So let's increase it by 20%, call it 1.2. The current level, 2.45. It's actually higher than it was during the dot-com boom. In the dot-com boom, it peaked at 2.36. Now, guys, keep in mind, this is 2.45 after the market's fallen how much this year already? It's fallen 15% or more, the S&P. The NASDAQ's fallen over 20. So this is the amazing part. It's still this high even after falling this much. So when people say to me, oh, Paul, is it over? We're not even close to over. It's going to take time. I truly believe that we are probably here in some fashion. People are starting to sit there. When I see the major hype stocks falling 70, 80, 90% in the last year and a half, when I see something like ARK Investment falling from a high of 160 and today it's 40, that's a 75% fall. When I see people like Cathie Wood saying that disruption is what matters without understanding anything about fundamentals, that tells me we're not done yet. We will be through this all when everybody gives up on the Apples and Teslas of the world. So what was the big news in August? Well, first off, last Friday in Jackson Hole, what sparked this big drop in stocks was Fed Chairman Powell finally manning up and saying what he needed to say that he should have been saying for a long time, which is they're going to be aggressive about fighting inflation. And their goal is a 2% inflation number that's been their goal for quite a long time. Inflation's still high. Now, in July, if you remember, gas prices have fallen a lot since July. So it's really brought down inflation. In fact, between June and July, there was no inflation. There was no increase and there was no decrease in costs. As much as people made fun of President Biden for saying that, it is true. And I do want to make sure that people realize that. We had no cost increase over that 1 month period. Now, we still had an increase from this July to last July, but it's a lot different. Housing was a big discussion, especially as interest rates go up. August ended with the average 30-year mortgage at 5.92%. July ended at 5.57. That's a big jump. That's a 3/8 jump in interest rates. Okay. Last year, it was around 2.7%. Guys, I will repeat this till I'm blue in the face. 2.7% versus 5.9%. Let's just say that's a 3% jump, right? Even though it's a little bit more. If you have a $300,000 mortgage, that is $9,000 a year extra. That is $750 a month extra out of your pocket. So somebody who owns a house with $300,000 mortgage might make $120,000, $150,000 a year, maybe, I don't know, something like that. That's a big chunk of money. That's going to directly affect prices. We're already seeing it. Home builders talking about record cancellations, contracts being canceled. At 17% of contracts, I believe, in July were canceled for regular homes. So this is definitely serious stuff. Now remember, this doesn't mean get scared, go run for the head. No, just remember this as you're going forward. If you're a person who's responsible and saves your money and lives well within your means, you'll be able to weather the storm, especially if you have a comfortable job and a good job. All right. Now, home prices overall, though, only increased 0.4% from June to July, when it increased 1.3% from May to June. So it's slowing down a little bit, when last year it was doing 20%, which is like 1.6% per month. So these are the things you have to sit there and factor in, okay? Now, the quarter ended at the end of June. So August finished the second month of the third quarter. Now remember, the first two quarters ended up with negative GDP growth. I will say in the defense of negative GDP growth, and I'm not saying that doesn't mean it's not true. It is true. But inflation spiked up. And remember, what is real GDP? Real GDP factors in inflation. So when you subtract inflation out of a rate and it ends up going negative, that's understandable. So now, does that mean we're going to avoid a recession, or we might not be in a recession right now? No. Just remember, though, that there are explanations to these things. Do I personally believe we're either in a recession or we're going to be soon? Yes, I do. Do I have any statistical data besides 2 quarters of negative growth? No. But the stuff we're seeing now that everybody jumps to and says, look at jobs, they're great. Jobs are a lagging indicator to recessions. They're not a leading indicator. I want to see more about what's going on with shipments on locomotives and things like that. That's what I want to sit there and see. How are businesses planning? Because the problem we have is a lot of businesses are factoring in that they have to plan for a recession. It's something crazy like 70% of CEOs think we're either in a recession or going to be in one soon. These are things. Now remember, don't go out there listen to all the fear and all that stuff. Just look at the data and make an unemotional assessment of the data. And your goal as an investor should be to be somebody who looks at the long term and doesn't worry about the short term changes in the market. I'm doing this video to just show the things that I pay attention to. I'm glad Jerome Powell mentioned raising interest rates. I'm glad when stocks go down. Wouldn't you rather be in that position to be able to look forward to that? Now, September is going to be a big month. It's the end of the quarter, so we're going to get some sort of reports at some point in October about how the quarter did, and some big companies report in September. I think actually I looked at it, like 2,000 companies reporting that are large cap, or something crazy around the world. But some of the big ones, Nike, Costco, Oracle, FedEx, and Micron. So I'm going to be especially interested to see FedEx and what they report. Now, do me a favor. If you're a fan of the channel, you know Mo on the channel. He has like a bitter war with FedEx. So don't bring up FedEx around Mo. He'll get he'll get PTSD. He'll start throwing things. It's pretty sad. It's actually quite funny. He doesn't throw things, but he and our friend Matt have this personal vendetta against FedEx. It's actually quite humorous. So if you like what I'm saying here, follow the channel, come back to it. We've done 1,700 videos since we started 2.5, 3 years ago. We do a lot of videos about this data, and our goal is to just look at the data and make decisions based on it. Thank you very much for your time. And if you like what I'm saying here, please watch our next video on the upcoming recession. Could be the opportunity of a lifetime. Thank you very much.